First of all, let me get your thoughts on that transaction. It's pretty much a swap deal where they're swapping crude for refined petroleum products. How significant is this deal in the context of the broader downstream petroleum industry, marketing industry?
Okay, very good question. Now, the main issue with that transaction is a cash flow issue. Because as far as NNPC is concerned, with the subsidies that they've been carrying over the years, one of the main problems that they have is that they have to pay for imported products. Now, paying for imported products at a subsidized rate is a killer. Long term, it kills. So NNPC has to find a way in the short term, right, to close that gap. I think it's a short-term solution, and I think if they do not address the issue, the real issue on the ground, they will run into trouble again.
And that real issue really is producing locally, isn't it?
Producing locally and taking away the subsidy. I think at the end of the day, we still have to look and come back to the deregulation question.
Yeah, the government is spending, like you mentioned, the government needs to regulate the sector and spending billions of dollars annually on subsidizing the importation of petroleum products. I believe the NNPC itself imports well over 50% of fuel into Nigeria right now. But coming back to the operators right now, does this put them at an advantage or disadvantage in your view, this transaction on its own?
Okay, operators being the retailers?
The others that are importing
the ones who, okay, first of all, the ones who are importing, when you have transactions where you have swap deals like this, the first thing it does is that it cuts the number of people that can import, because the volume or quantity that is out there for different people to import goes down. So you would say that for some of the operators, it puts them at a disadvantage. Now, for the country as a whole, the number of cargoes is, it doesn't really matter, because it's the same amount of cargoes that is required to operate in the country that will still be imported. So that's not where the real issue is. At the end of the day, the issue is that the products that are imported at a cost. And that cost is offset by the crude that is exported. So the value of the crude is what you use to bring in products that are coming in. But those products are still sold as a subsidized rate to the retailers. And that is where the issue is.
Let's talk about the petroleum marketers right now. And we know that there have been some changes to the structure of repayments of subsidies, but not much has changed really from what I'm hearing. I think the government continues to delay in these payments, don't they?
Okay. Yes, the government delays because it's a huge cost. Now, when you say the subsidies that go, the subsidies do not go to the retailers, because at the end of the day, the retailers are selling what they have bought from the government already subsidized. Where the real payment and the difference is between those who are importing. So if I import and I import higher than the subsidized rate, then the government pays me. So as an importer, I get that benefit so that I'm cushioned from the international loss from the market. However, by doing that, the government's payback is not coming at the right time. So there are delays, but that happens in business, and you have to take the fact for that in essence.
And it's really a very low margin business, and that thrives on volumes, isn't it? Right. Given the structure of the fact that prices are regulated.
Again, at the downstream retail end, and we always have to separate it, because those who are importing are different from those who deal retail downstream. Now, the retail downstream, they will struggle. Low margins, and they still have market forces to deal with. So they have to pay bank loans, they have to pay transporters to transport the products in, they have to compete for staff in the market, same market. And so all those overheads still go into those low margins. They cannot survive. Long term, it just cannot continue.
I mean, you speak of some of the pressures that these marketers are dealing with right now, but going back 2 years, we have seen them come under significant pressure, and even some are calling for a bailout because of the losses. But can you just give us a sense of the history and what exactly happened to these marketers? Why are some of them calling for a bailout right now?
Okay. Over this period of time here, historically, you would always see that you have inflationary issues in every country. Now, they're competing again with bank loans that will go for higher profits, margin businesses. But the banks really don't care at the end of the day. If you can pay the interest, you pay the interest. So they will charge you that interest, regardless of whether you're making a loss or a profit. So they have that pressure. Now, each time, let's assume in the past there has been a slight shift in which has happened. There's been an increase in petroleum price when the pressure has been high. As soon as that happens, guess what happens? Every other market increases their price. We're back to square one. And once that happens again, the people who take the brunt are the retail marketers.
And they're also exposed to currency risk, obviously, because late 2008, we did see the Naira weaken significantly. I think over a month, it lost close to 20% of its value when the, if you like, the central bank allowed the Naira to fall a bit, given the decline in oil prices then. So that's another pressure that they're also exposed to, isn't it?
To a slight, small margin. It's not that high because they are not importing directly. However, every now and then, when they cannot get products from NNPC, then they go out to buy from importers, in which case then they suffer currency price risk.
But do you think the call for a bailout is justified, given the fact that really, if they do not operate, there will be a huge shortage of petroleum products in Nigeria?
A bailout is short term. If you ask me, if they deal with it now and they do not deal with the main issue, then we're just fooling ourselves. And I think until the government has decided that, you know what, let us tackle the real issue, and that real issue is that let us deregulate this market.
But there's always been that social pressure. It happens every time the government tries to deregulate and increase prices as a result, to equalize prices, so to speak, with the movement in the international oil price. There's always that pressure from the labor groups that doesn't allow the government to execute on this.
I agreed, and I think it's being penny wise and pound foolish, because as long as we continue to sit down and stop certain things, market forces, from operating in this way, the cost to us long term is worse. And that is what always happens. Yes, I understand the arguments that the labor use when fighting deregulation and equalization of prices. Fully understood. However, if we look back over the long term, we see that we have been in serious trouble because we have not addressed those issues.
Let's look at given the reality on ground, because like I mentioned, there's always that pressure to keep the market regulated. The need to diversify the business, given these pressures of the regulation of prices. We've seen companies, for instance, like Oando, over the last 4 or 5 years that have significantly diversified their business, and that's one of the stocks that many analysts point to as attractive in that sector. How critical is it, in your view, for companies to diversify?
Absolutely critical, because if you're a solely downstream retail oriented company, you're dead. Okay, so even in my business, that's one of the things that we had to identify with and deal with a long time ago. So you must diversify. Now your retail outlets only give you exposure, a public face, awareness, because that's all it is today. If you do not diversify and you move out, like Oando had to do, if Oando stayed a downstream retail business, by now I can assure you it will be dead. Absolutely. In our market today, that's exactly what you see. So you have to diversify, you have to go upstream, you have to find many things where you will be able to augment for the losses that you make in the downstream.
And also, on a final note, let's come back to the NNPC, Trafigura and SIR transaction. We hear of companies like Petrobras in Brazil, obviously oil juggernaut globally right now. I think everyone is still expecting NNPC to evolve into that institution that will be across Africa and probably in several other continents. What's your thoughts on NNPC moving to that type of institution, given the fact that that's one of the things I think the PIB, the Petroleum Industry Bill, is supposed to tackle? Okay,
I'll use a word that I actually hate using, which is potential. NNPC has the potential, and they have no excuse for not fulfilling it. They have everything that is required of them to make it. So can NNPC do it? Yes. But what does NNPC need for them to be able to do it? Frankly, they need to be unshackled. They cannot continue carrying the burden of subsidizing downstream if they want to focus on upstream, because it just kills them. So they have to leave there, focus fully on what they need to do, move into the upstream, go out there and deal with it with the professionalism that is required in this world. Tonye Cole is doing it. NNPC has no reason why they shouldn't do it. In Africa, if there are two countries that have absolutely no excuse for not going out there and leading, it's Nigeria and Angola. No excuse.